I'm your host, Luke Antal, co-founder and chief community officer here at Alumni Ventures. This week, we're talking about the difference between venture capital and private equity. Both PE and VC are considered alternative asset classes, and both are typically hard to access for individual investors. Even a very wealthy individual can't just log into their brokerage account and find options to invest in venture or in PE. But in recent years, many alternative investments have started to become more and more available to individuals, and so it's important to understand some of these differences. Let's start with an overview of private equity. PE typically invests in mature companies in any industry, using a combination of equity and debt. Target companies often are distressed or restructuring, but still have favorable growth prospects. Deal sizes are often relatively larger than in venture, oftentimes in the hundreds of millions of dollars. Perhaps the largest difference with venture is that control of the company often is assumed by the acquiring PE firm, which will undergo a series of changes which can sometimes include management changes or financial engineering. After a period of time, usually at least several years, PE firms look to sell the company at a higher price. Lastly, a PE firm will usually do fewer deals than venture firms, and the power law really isn't a factor in terms of fund returns. Now, venture is a bit different. VC typically invests in private emerging technology companies, and investors receive equity for their investments. Companies can range from being very small, think a founder in her garage, all the way up to large pre-IPO growth companies. As such, deal sizes also can range from a few $100,000 all the way up to tens of millions of dollars, or in rare cases, even more. In venture, the founders retain control of the company, and the venture firm serves in an advisory capacity, usually with the lead investors taking board seats. VCs are looking for an exit through M&A or IPO, and importantly, venture is a power law asset class, meaning that a relatively small number of investments provide most of the fund's returns. Well, I hope this was helpful. At Alumni Ventures, part of our mission is to evangelize the venture asset class, and we try to do that through informative and educational content. Thanks for tuning in. Be sure to follow Alumni Ventures on LinkedIn. Thanks.